Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today, right now, it is 9 a.m. Pacific. It is about 12 p.m. Eastern, and the FOMC interest rate hike decision is on the horizon in just 2 hours. So that will come at 2 p.m. The speech by Jerome Powell with Q&A will come at 2:30 p.m. And of course, we will get the interest rate hike at 2. And then, the Q&A and presser from Jerome Powell is where the juicy information comes from as we look and decipher his speech to understand how the Fed is going to interact with the markets moving forward, meaning, will they continue to hike rates? Will they pause rate hikes? Are they looking at pulling back rate hikes? Are they pleased with inflation data? Are they upset with inflation data? Are they pleased with unemployment data? Are they upset with unemployment data? Is wage inflation, still on their focus? So there's a lot of, core information that we're going to get from that Q&A and from that presser. But I think really the main thing that the market will be looking for is the continued rate hikes. Are they thinking about continuing rate hikes in the future, or are they thinking about slowing down rate hikes or pausing them in the future? So we'll be looking a lot for language in regard to those things. The market will really want to understand interest rates, but obviously how the Fed puts into context whether or not they're pleased with progress or with the state of the economy. That context will be very important. So looking at the dollar, as we've been discussing, it has been sliding down. It did obviously break the 103.6 level and has been getting lower. Pretty ugly set of candles right here. It does seem like we'll probably end up dropping down to 101.2 or, just around 101 or 102 in general. But it is important to consider that obviously FOMC is today. So any wacky volatility will obviously be experienced both in the dollar and risk market. So if the dollar shoots up, risk is shooting down. If the dollar shoots down, risk is shooting up. I would expect some volatility from this, just like I'm expecting from equities. So if we get a 25 basis point hike, maybe we do something like this and then head down. If we get a 0-point hike, maybe we do something, or not really a hike, but 0 basis points, no move, null. Maybe we go down and then we come back up. So very important to consider the possibilities for the dollar, but we should see inverse volatility compared to risk markets, meaning if the dollar goes up, risk goes down. If the dollar goes down, risk goes up. So continually monitoring this. It is looking bearish, but important to consider you're coming up on where you would expect some supports to be had. So this is where I would, you would more or less expect a bounce, top of this range, bottom of this range. So would expect to see something around 102.5. If the markets stall a little bit. Looking at equities, so when we spoke yesterday, we were kind of bouncing off of this trend right here. We obviously did make it to the the 40-10 level, but stalled there and basically just traded directly under that pretty much since we spoke last. So 40-10 is definitely the resistance level. You got a kind of an ugly doji here. You still got 2 hours left in this 4-hour candle, so not ready to count it out yet, but continuous rejection from the 40-10 level is certainly not anything you want to see prolonged if you're bullish. So what equities need to do is break above 40-10, and then you can move higher, start talking about trading above trading above the 40-10 levels, but trading back into near 40-50 and or higher. Remember, after we broke this range, this was basically, we obviously dropped down here and then we tested the range again. And 40-50 was, the low end of that area, and 40-80 was the high end of that area. So we want to get above 40-50. If you get above there, 40-80 is obviously going to be resistance. And then if you can get above 40-80, you've got a lot of free roam up here. Because you'll basically be accepting back into this previous range that we traded in early February. So get above 40-10, a lot of good things happen. Get rejected at 40-10, and I would assume you're probably back down or trading around this trend. And then I would assume that wherever the VWAP is, provided if we drop, I would assume the VWAP would likely be support. That would probably be around 39.70, 39.65, somewhere around there. And then if you fall back in within this trend, then, you're talking about, 39.20, 38.70, and, back down into this range. So we want to get above 40.10. If you can't get above 40.10, you really want the estimated 200 moving average or the VWAP to hold. If neither of those hold, you're trickling down lower. So looking at Bitcoin, quite a, not a super bullish morning, but a bullish morning nonetheless. We did tag as high as 27,740. And we are, of course, at resistance at right around 28.6, which, remember, coincides with the low end of this range that we traded in back in May. Not the exact low. The exact low was obviously 26.7, but to accept back into this range, we need to break above 28.6 and confirm that break. So, of course, looking at the daily, there is no confirmed break. Looking at the 4-hour, there is no confirmed break yet. So we want to see that break. We want to see 28.7 kind of flip. It's really 28.65, but, we know where the line is. So flip that, and then you're moving higher. And of course, I'll zoom out one more time, and you've basically got room all the way up to, 32K, which is the top of this range. So maybe you see some resistance at 29.30, nice round number, and then your 32K, 32.4 is the high end of that range. So that is the bullish continuation for Bitcoin. And then, of course, if we get rejected at 28.6, then we are likely coming back down. I would say, at first the VWAP, which is around 28K. Then I would say, Monday's lows or Sunday's lows, which would be 27.5 or, 27.1. And then you have 26.6. So I'm not saying if we get rejected here, we're going to drop immediately to 26.6. You definitely still have a few levels of likely supports. And then you also still have this trend. So this is worth mentioning. Just the fact that this trend is still standing. So something to watch out for there. Maybe if it gets rejected here, maybe we drop, to 28.4, or we drop to the previous daily close and deviate back in. So a lot of, I'm not expecting, just an immediate green launch candle higher, but, definitely we'll expect some volatility in this range and some fake outs to probably scare some traders. Not a guarantee, but typically what we see. So get above 28.6, 28.7, launch pad higher, stay below it. You're probably volatile above 28K. Below 28K, things get hairy, and you're probably dipping back to mid 26, 27K before potentially reload or obviously breaking lower. Looking at Ethereum, so yesterday we discussed, 3 taps, and typically that will be bearish, and we did get a bit of a rejection, but obviously VWAP held very strong throughout the entire day yesterday. Price is obviously moving back up into this little demand zone, and this is, very similar to the DXY demand zone that we have here. ETH has a very similar one. So, every time it traded above 1834, it basically ended up with a wick. And so that's obviously not positive. And so clearly there's a lot of sells happening here the demand to offload, so it's a bit of a wrong term in terms of, quote unquote demand zone, but it's more of a sell zone. So people are selling en masse at this level and are not allowing 1850 to be broken. So very much something to consider if price does get up there, but 4 or 5 taps in an area definitely signals some strength and the likelihood that it wants to eventually press through that level. So if we do end up making it back up there today, then, definitely would be a good sign, but you need to get above this, sell zone to break higher. So just looking at the daily, like we did for Bitcoin, to understand if we do break higher, what's the context. So where we're at right now is we are just above the September highs, which were also the July highs. So if we can get above, if we can finally confirm on the daily above, the 1800, 1795 level, then what we can do is we can bust back up into confirm into this range that we traded in predominantly for the most of August, all the way up to 2K. So confirm above 1800, 1795, then you've got, pretty much free roam up to 2K, provided the market continues to stay bullish. So, and of course, the recent highs have been 1850. So what we really want to do is break above 1850. And then we obviously have a lot of room to roam, but step one is close above 1795, and you've got a little bit of bullish momentum to then try and capture 1850. So again, FOMC meeting is in just under 2 hours. We are expecting a 25 basis point hike. There is a 80% chance of a 25 basis point hike and about a 10 or 15 to 20% chance of a 0-point hike. So I do believe that we will likely get a 25 basis point hike. I think that would breed a little bit of downside volatility, and then I think that gets bought back up relatively quickly. So that is, of course, my opinion. You can feel free to fade me, but my one recommendation, no matter what your feelings are, is trading the actual FOMC announcement is usually low alpha unless you are pinpoint in terms of exactly the right type of trade. So typically what I do is I trade after the Jerome Powell's speech starts at 2:30 Eastern. So typically after that original volatility happens, at 2:30 the speech happens, and then the momentum starts to take hold because the market is understanding forward-looking outlook based on how the Fed is going to interact with markets, like I said in the beginning of the session. So the momentum will carry and be set during the speech. All of the nasty volatility will occur 2 o'clock to 2:30. So please be aware of that and manage your risk accordingly. Today is likely going to be another, difficult trading day. FOMC days always are. So good luck, happy trading, wishing everybody the best. And again, if you're confused or uncertain, you don't have to trade this. You can just wait till after the speech is over and wait till everything is done and attack the markets after that, because there's always going to be more volatility in the future. So good luck, happy trading, and see everybody tomorrow.